Are you ready for the economic shifts that could potentially lead to America's collapse?
Today, we will unleash insights from elite analysts such as Pedersen, Onge, and Snider.
Exactly. These experts break down fierce market conditions and the implications of current central bank policies.
And here's the best part. We've distilled hours of their expertise into quick, digestible bites.
Stay with us to discover not only the risks, but also the golden opportunities in investments like Bitcoin and gold.
But wait, we've got a tantalizing tease that you won't want to miss at the end.
Just a quick note, this content is for educational purposes and not investment advice.
Stay tuned for our next discussion, Global Bonds Are Moving, and what central banks don't want you to know.
So we're diving into the intriguing world of global bonds, and it's about time we unpack what Jerome Powell is really up to, right?
Absolutely. Jerome Powell is like a cat chasing its own tail, confused and all over the place, especially regarding interest rates.
Wait, so you're saying that the central bank's indecision is creating chaos in the bond market?
Jerome Powell's confusion trickles down to the market. It's not just about rate cuts. It's about understanding how we even got here.
So it's like the Fed is trying to navigate through fog without a map.
Exactly, and when central banks start improvising, the whole system risks a major shock.
Jerome Powell doesn't seem to realize that his policies have driven U.S. Treasuries off the cliff. The market basically says rates will drop as soon as Jerome Powell just gets out of the way.
So it's like waiting for an overbearing parent to finally take the training wheels off.
And until that happens, we're stuck in this cycle of confusion.
Stay sharp. It's a treacherous environment out there.
Indeed. Let's keep our eyes peeled for Jerome Powell's next move. He's sure to cause a stir.
That's right. This is a financial roller coaster, and you definitely don't want to miss the next turn.
Professor Richard Wolff asserts that we are witnessing the decline of the American empire. This is not just an economic issue, but a deep structural crisis.
That's quite a statement. What evidence does Professor Wolff provide to support this analysis?
He notes the stagnation of real wages since the 1970s, essentially meaning many Americans can afford to buy as much now as they could back then.
It seems like a domino effect. First the economy falters, then the empire follows suit.
Exactly. Professor Wolff emphasizes that this is unprecedented for a superpower.
Wolff claims that many Americans feel financially squeezed, with no real options to improve their situations.
And that's due to the unsustainable debt, right? It's like living on borrowed time. Professor Wolff warns that the protective turn could revert the U.S. to isolationism, much like in the 1920s.
Right, but doesn't history suggest that isolationism can backfire, especially during economic downturns? So, Wolff suggests that a new era of understanding and cooperation is vital for survival.
Indeed, it's like turning a ship. It requires both awareness of the current direction and an intent to shift.
Luke Gromen believes that the U.S. will need to devalue the dollar significantly to keep its economy afloat.
That's a bold claim. What evidence leads Luke to this conclusion?
He points to the unsustainable nature of rising debts and deficits as crucial factors. He highlights that true interest expenses are already over 90% of government receipts.
How does the government plan to navigate the impossibility of covering these expenses?
It's like being trapped in a game where the rules keep changing, but the only solution Luke sees is letting the dollar fall.
Luke states, there's a high chance we see a dollar devaluation by 2025.
What led him to that conclusion?
He argues that historical precedents suggest significant economic changes are on the horizon. Luke believes that when interest expenses exceed defense spending, the U.S. will prioritize military over bonds.
Could that mean we prioritize defense spending over economic stability?
Absolutely. It's a clear illustration of how military power increasingly drives economic decisions.
Luke sees significant upsides for Bitcoin and gold if the dollar weakens.
How can investors prepare for this shift?
He advises reallocating assets toward these commodities, as traditional bonds may not offer security anymore. Luke predicts a chaotic but potentially rewarding economic landscape following dollar devaluation.
Does that mean all investments are going to skyrocket or crash?
Both. It's about timing and smart asset allocation in a volatile market. Luke Gromen predicts the market will see a drastic rise in gold, Bitcoin, and stocks following devaluation.
So how should everyday investors adjust their portfolios?
Focus on diversifying into these resurgent commodities for greater security. The financial world is shifting, and those who adapt will thrive.
It's like preparing for a storm. Getting ready now can help you weather any financial chaos that follows.
So, becoming informed is more important than ever.
After the Fed's unexpected announcement last week, many viewers are asking if this is a bump in the road or something more serious.
Absolutely, Adam. The market's immediate reaction was sharp and has left investors feeling uneasy.
I mean, how much does the reaction really reflect a genuine change in the market's health?
The markets are reacting as if they expect even higher rates than what the Fed projected.
So does that mean we're in for a rocky road ahead for investors?
Exactly. Investors should prepare for what this means for their future investments. So John, how significant is this Fed shift for investors?
It's crucial, Adam. The markets were banking on a clear path of easing, and now signals suggest otherwise.
That sounds like a real game changer. How should people adjust?
The yield curve has uninverted recently, indicating a potential economic shift.
And that's a big warning sign, right?
Exactly. Historically, these inversions lead to market downturns.
So Mike, how stable can we expect the market to be moving forward?
Well, the sentiment now shows excessive optimism, which is usually a red flag.
Could we be looking at another crash, like we did in the early 2000s?
John, do you foresee a correction similar to the 2008 crisis?
It's certainly a possibility. The current scenario is reminiscent of prior bubbles.
What can investors do to protect themselves?
Investors will need to evolve their strategies to mitigate risks.
How can one begin to do that?
Consulting with experts may be a wise move at this juncture.
So to sum up, cautious evaluation and adaptation are essential, right?
Exactly. Strategic thinking is key for long-term success.
Don't let the euphoria blind you. Stay grounded.
Pedersen Onge believes that dismantling the Federal Reserve could be one of America's greatest economic achievements.
That's quite a statement. What evidence does Peter have to back this up?
He points out that America operated without a central bank for its first 140 years and thrived.
How does Peter envision achieving this monumental change?
He suggests setting up a gold standard to limit government spending, making inflation less likely.
Peter highlights Powell's admission that he screwed up with inflation predictions. What implications does this have?
It raises questions about the Fed's credibility and their ability to manage the economy effectively. Peter warns of a potential recession next year. What factors does he cite?
He points to growing government spending, mismanagement, and inflationary pressures as major concerns.
Peter emphasizes the importance of gold and Bitcoin in economic security. How do these assets perform in troubled times?
He believes that they provide a safeguard against inflation and government mismanagement.
If Peter's predictions hold true, what would a gold standard mean for the economy?
It would tighten monetary policy and help prevent the inflationary cycle created by the Fed. Is there support for such sweeping changes in Congress?
Peter suggests that with growing public awareness, change may be within reach. Peter's ideas prompt us to think about our economic future. What steps should viewers take?
Educating themselves on monetary policy and advocating for transparency are critical first steps.
In today's conversation, we have Thomas Jam Pedersen, the founder of Copenhagen Atomics, who's here to discuss the future of nuclear energy.
Thanks for having me. It's time to rethink our approach to energy production, and nuclear must play a key role.
Absolutely. Let's dive in.
Most analysts are questioning if tripling nuclear output is realistic. My view? That's just scratching the surface.
Are you suggesting we could replace fossil fuels with nuclear? That sounds ambitious.
It's not just ambitious, it's necessary if we want to enable true global prosperity. Relying solely on wind and solar? That's unrealistic. Their intermittency doesn't match our energy demands.
So you're saying we need nuclear to balance out these gaps?
Exactly. A diverse energy mix is crucial for stability, hence the need for advanced nuclear technologies. Most energy discussions ignore industrial heat. This accounts for a significant portion of global energy needs.
But can we really electrify those high heat processes?
Not effectively. We need to go beyond just electricity. Nuclear can meet these heat demands at scale.
So what makes Generation 4 reactors a game changer?
Their efficiency. These reactors can recycle waste and operate safely at higher temperatures.
Fascinating. That could revolutionize how we view nuclear energy. What do you predict for nuclear energy by 2050?
I see a world where nuclear constitutes over half of energy production, conditional on embracing advanced designs.
That's a radical transformation.
Thorium is going to play a major role moving forward. It's safe, abundant, and can be harnessed effectively.
But why thorium over uranium?
Let's just say it solves many problems we face with current nuclear fuels. The future demand for clean energy is massive. We need to rise to this challenge with innovative technologies.
So, it sounds like nuclear could lead the charge in our energy transition.
Absolutely, it's time we fully embraced it.
What an incredible dive into the world of finance and energy.
Yes, each guest brought such unique perspectives. For instance, Thomas Jam Pedersen's call for a massive increase in nuclear power was eye-opening.
That's right, and it really sparked a debate about the future of energy.
Absolutely. Speaking of debates, Peter St. Onge's take on abolishing the Federal Reserve definitely raised some eyebrows.
He was quite the provocateur. It's interesting how, while there's some agreement on reevaluating economic systems, the solutions are so divergent.
Agreed. The insights from John Lower and Mike Preston about market volatility showed how central banking influences investor sentiment.
And Luke Gromen brought in crucial points about the US dollar and its implications for various asset classes.
Totally. Those intertwined narratives create a fascinating puzzle for investors.
And let's not forget Professor Wolff's thoughts on the decline of the American empire.
That discussion reminded us that the global dynamics are shifting.
You know, the contrasting views on nuclear energy versus renewable energy also highlight that no one solution fits all.
Exactly. It all comes back to understanding how these changes will affect our financial decisions.
If you enjoyed unraveling these insights, make sure to give us a thumbs up and subscribe.
Your support helps us keep providing these informative sessions that you can't afford to miss.
Thanks for joining us today. Don't forget to check out our other videos filled with expert wisdom.